Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our Metals and Mining Conference. Our next live presentation is from Horizon Copper. And Horizon Copper has a portfolio of interest in some of the largest copper projects in the world. Please note you may submit questions for the presenter in the box to the left of the slide, and you can also view a company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. At this point, I'm very pleased to welcome Irfan Kazemi. He's the President and Chief Executive Officer of Horizon Copper, which trades in the OTCQX Best Market under the symbol HNCUF and on the TSXV under the symbol HCU. Welcome back, Irfan.
Thanks so much for having me, and thank you for everyone who's listening in. I'm excited to tell you about Horizon Copper for those of you who aren't familiar with us. And for those who have heard the name, a new copper name in the space, giving an update on our portfolio. And through this presentation, feel free to just ask questions and I'll try to address them as I go through, but there will be time at the end to put some questions through. And to the extent we run out of time, feel free to reach out to me and happy to go over things one-on-one or through the meeting system. So just a reminder that a lot of the stuff that I'm saying hasn't happened yet, so cautionary language would be appropriate. But for those who aren't familiar with, Horizon Copper, that's quite understandable because we're a relatively new copper story. We've only come out in the last couple of years, and we've come out with, I think, a pretty phenomenal portfolio of world-class interests. And at Horizon, we are aiming to be the premier choice for people who want copper exposure, a choice of asset allocation where you can get comfort in the quality of the assets that the company has. So when you look at our portfolio, our assets are all in the first quartile, world-class interests. A premier choice when you're looking to get exposure to quality operators. Our assets are run by some of the largest mining companies in the world. And we're a company that's acquiring all these minority positions in copper assets all over the world and building this incredible, I think, portfolio filled with diverse jurisdictions, diverse counterparties, and diverse assets. But they all have one thing in common. They're all world-class assets. And so with Horizon, what you get is not only great quality assets run by great quality partners, but you get this tremendous torque. And I think that's quite unique to our story. We have 250 million enterprise value. Our market cap is only, 80 million US. And so the difference between that market cap and that enterprise value is all leverage. And in the mining space, leverage can be a bad thing, but our leverage is all held by one strategic partner, isn't owed for another decade, doesn't have financial covenants. And I'll get into the story behind why we think this is more of a feature of our story and why it's so attractive. And so the last thing I think is pretty unique to our story is we have a strategic partner. And that strategic partner helps us acquire assets. And in exchange, the beauty of copper is it comes with precious metal byproduct, and they get a right of first refusal on any precious metal streams and royalties that we sell. So we're able to build this portfolio of copper-focused assets, access to low-form cost of capital, and continue to build the diversification of the portfolio. And so it's an exciting time to be at Horizon, and we're excited to continue to grow so that over the next decade, we become the premier mid-tier copper company in the space. A bit of background on myself. I have background of, being involved with a company where I joined as CFO and helped raise over $1 billion in US debt and equity financing, negotiate with some of the largest mining companies in the world. That company grew from a TSXV company to a company that's on the Toronto Stock Exchange and the New York Stock Exchange. That's a multi-billion dollar market cap. And so certainly have an experience taking companies at the early stage and continue to grow them and getting, I think, good returns for shareholders. And I hope to be able to do that with Horizon as well. And I think we've been able to, grow out of the gate a pretty impressive portfolio. So I won't spend too much time on, what we believe to be the copper deficit coming over the next many years. I think grades are coming down. I think the discoveries are becoming less frequent. And so we're really at a stage where just based on population growth and GDP, we anticipate there to be a deficit. And I think when you look at the copper story, for me, it's always been really important of what are the quality of the assets underlying that portfolio when you want copper exposure. And the key things for me are you want assets that have long life durations. So ones that, don't have like a short mine life, like 5 years, 7 years, et cetera. You want ones that have, many decades, or the expectation that they can go for many decades, because when copper prices eventually go up, and our expectations they will go up, the value of your portfolio significantly increases when you've got long duration assets. The other thing I think is important to look for when you consider copper stories are, what are the quality of those underlying assets? Are they in the first quartile, second quartile, third quartile, or the worst quartile being fourth? And the reason that's important is it's cheaper to explore, to add more pounds to the resource if you're in a low cost operating asset. Those are the ones who get more access to capital. They're the ones you get better, cheaper drill results, adding to the resource and reserve, and it's able to invest greatly into that asset. The other thing I think is important to look for is, what are the quality of the operators within those assets? If you've got a portfolio, or if you've got one asset and you've got one jurisdiction, and you have one asset that's hopefully being put into construction in the next few years, do the operators actually have the experience to deal with the challenges and issues associated with it? And so when you look at our portfolio, it hits the box on long duration assets. It hits the box on, first quartile assets, some of the best assets in the world, some of the largest assets in the world. And then the third box that I think is important, the quality operators. Antamina, that's run by, a conglomerate of a partnership of Teck and Glencore and BHP. Oyu Tolgoi, that's run by Rio Tinto, another large mining company, and Hot Mon, our last one, is run by Essar, another large multi-billion-dollar mining company. And so you've got a lot of experience and access to capital to move these projects forward. The other thing I look for in a portfolio is how much of your asset base is cash flowing or near cash flowing. Because in my experience, the market doesn't give much value to projects that are 5 years out or 10 years out in terms of production. They often look at what are the more recent cash flows coming in and how quickly are you expected to receive cash flows. So we were very deliberate in our portfolio to put most of our NAV, most of our value in cash flowing assets or very near-term cash flowing assets. So today with Horizon, even though we're sub 100 million US market cap, we have our most material asset in Antamina, which is cash flowing today. This is an asset that is world-class. It is the third largest copper mine in the world. It's considered one of the most profitable mines in the world, period, independent of commodities. And, most recently in the last year, they've come out that they've extended the mine life, by another, decade, so 2036. And we expect that mine life to continue expand. It certainly has the resource to support a multi-decade mine life. And so we're quite excited to have that in our portfolio. This is an asset that'll cash flow to Horizon, 10 plus million US a year on an annual basis, just based on commodity spot prices now. And it has a lot of leverage and torque to it so that it can go even higher than that if copper prices go up. And so we're really excited to have that as a cornerstone asset. The second asset in our portfolio is on the Hugo North extension, Oyu Tolgoi, for 24% ownership of Entrée Resources. This is an asset that is going to be the fourth largest copper mine in the world by the end of the decade. Rio Tinto, the operator of that asset, They announced, a year ago that they planned on being development ore on the portion that's subject to our interest by the end of last year. They did it. They're now in development ore. We anticipate production to be sometime in 2027 based on what Rio Tinto's guidance is, and then ramping up production beyond that. So this is an asset that, has just a reserve case of, almost a couple decades, 17 years, plus a resource on the second component of over 20 years. So this is an asset we believe that would be cash flowing for many decades. And so again, it shows the quality of the portfolio that we've tried to build. And the Hot Maden, this is an asset that is in early works right now. It has its key permits in place now. There's been a lot of expenditures over the last 6 months. We anticipate more to happen. And we anticipate there to be commercial production probably in 2028 on this asset. So you've got an asset that's our most material cash flowing now. You've got Oyu Tolgoi that's producing their in development ore that'll get cash flowing in a few years' time for us. And then Hot Maden, which is in early construction work. So a portfolio that has a lot of that built-in growth. Again, this slide just demonstrates that these are truly world-class assets. Third largest copper mine in the world will be the fourth largest copper mine in the world, and one of the highest grade gold copper mines in the world that won PDAC Discovery of the Year a few years ago. Antamina, this is kind of like on a bucket list for a lot of mining engineers to visit. So we were excited for our team to go down there and visit this asset when we acquired it. This is an asset that's actually run by a few different companies. It's kind of a conglomerate of Teck, Glencore, and BHP and Mitsubishi. And so it's not independently material to either of those entities because it's split up. And so we often go out there and talk about the unique things happening with this asset. And I alluded to earlier the fact that last February, they came out with an expansion plan, modified EIA that said the mine life got extended from 2028 to 2036. Now that wasn't a surprise to us. It isn't a surprise to people to follow Antamina, but it just shows you, the process they take, how far in advance they plan for this mine, and why it's considered one of the best copper mines in the world. What was unique to this asset was when we acquired it, we didn't anticipate, but we're happy to see that they had actually planned as part of that EIA to have a throughput expansion. And so that throughput expansion was expected, the permitting at least allowed for 30 to 40% increase in throughput expansion. Now that's not something that'll happen right away or over the next couple of years, but over time, if they implement that, that's real incremental cash flow to Horizon, the company. And so we're really excited to have that. Again, when you associate yourself with first quartile asset, world-class asset, you get more surprises the upside as opposed to surprises the downside. And so we're excited to have that in our portfolio. Oyu Tolgoi, this asset, I think is really unique and unique in all the right ways. That shaded area that you see is the Hugo North extension. This orange and this green part, that's where our interest is through Entrée on the Hugo North extension. Again, the development ore on the green section right now. And then in our projections that you'll see later, because I think, EBITDA and cash flows are really important to a company, you can see that even this orange section, we don't even include in our projections, but this would represent, hundreds of millions of dollars to us. And so it is quite significant. But this is one where they've recently come out with drill results. The drill results, our team has put into Leapfrog and looked at it, and we've been really excited to see, how this ore body can expand and how open it is. And I think this is going to be one of those assets that you look back on and people will say, how did you get access to it? And as copper prices in the long run go up, our attributable cash flows will be quite considerable from it. Hot Maden, our third asset in our portfolio, and this is truly a unique asset. It's an outlier in terms of gold grade, as you can see on the x-axis. It's an outlier. On the y-axis, you can see the copper grade. It's an outlier in copper grade, and it's all at near surface. This is, I think, an asset that has had very little drilling on it. We're excited for more drilling to happen over the next year. And we're really excited for the operator to move that project forward. And we're working with them on their plans over the next year as they come to a final investment decision. So stay tuned for news coming out of that asset. Over this last year, we've had, great news come out of our portfolio as it matures. One, the Antamina, the throughput expansion, expanding its reserve life to 2036. Oyu Tolgoi, the considerable amount of drilling that's happened, that's come out that shows the potential of this ore body. And then, lastly, Hot Maden, the fact that capital's been spent on it, it's got its key permits. We hope to see more good news come out on how that asset's moving forward and moving into commercial production. I think will be really exciting as they work through early works right now. In the background, we've put in a $30 million US revolving credit facility plus a $20 million US accordion with large chartered Canadian banks to give us that additional capacity and firepower. Because I, acquired shares in the company as all part of the public financing. I didn't take any, founder shares or founder warrants. It was all the same kind of equity pricing that the rest of, investors, institutions, high net worth individuals got in. My incentives are very much in line on share price accretion as opposed to just expanding and growing bigger for the sake of growing bigger. And so to me, it was really important to build a portfolio where you can get actual, attributable EBITDA to the company. And this slide, I think, demonstrates it. This is just based on the assets we own today. What would your attributable EBITDA be to Horizon based on varying commodity prices, next year, 5 years time, and 5 years after that? And I think this just shows you could be, having close to your market cap on an annual basis in attributable EBITDA over the next decade. And I think that's pretty considerable. So the question to me is, do you get comfort in the quality of the assets? That's question number one. Are these assets good? The second question I think is worthwhile answering is, do you believe the operators underlying those assets can move those assets forward? Can they construct it? Can they build it? Can you get to those cash flows? And I think in our portfolio, already Antamina is cash flowing, so that resolved that question. Oyu Tolgoi, they're in development ore. They've spent the capital underground mine. They've done, over 130 drawbells. The underground mine is working. So to me, that's an easier answer to question. And then the third asset in our portfolio, Hot Maden, the question becomes, will it get its permits? Yes, it's already got its key permits. Are they spending money to move it forward? Yes, they are. And it's an early construction work. So it's just a function of time, we believe, before they make their final investment decision and hopefully get into commercial production over the next few years. And so I think this is a compelling story driven by not only strong quality assets, but a good cash profile underlying it. So this touches base on, I think, what I think is a key feature within our story is good quality assets, yes. Good operating partners, yes. But one thing I love about the story is the torque in the story. The torque being, as I referenced before, you've got $250 million enterprise value US. You got your market cap close to 80 million US, and that difference, that difference in market cap and enterprise value is really the leverage that you have. That leverage is unique. It's held by one strategic partner that owns 34% of the company, so your interests are aligned. The interest rates on that are quite low. Half of that debt is non-interest bearing until Hot Maden, our third asset's in commercial production. Our other half of the debt is at 3%, so your all-in interest rates is quite low. There are no financial covenants, so you're not, terrified as a mining company. If I have a bad quarter, a bad year, can they suddenly come in and take my asset away, which you would find with traditional forms of debt? And so I think that is very unique. So right now, the cash flows that we have are just going back to paying down the debt. And so you can see, just based on the assets that we have today, that debt over time just gets paid down. So, this slide 2025 shows your net debt to attributable EBITDA, and it shows at a high level But if we do nothing, if we acquire no new assets, if we convert none of that debt to equity at our option, and we just use all our cash to pay down the debt, over time, more of that enterprise value accretes to equity holders, and you end up owning more of the company over time. So you get, to me, that double whammy impact. And one of the terms within our credit and our debt with our strategic partner is, as our share price increases, we have the ability to pay down debt using our shares. So if our share price goes to $1 million, we can pay back $1 million of debt with one share, subject to them not owning more than 34% of the company, because they don't want to consolidate our financial results. But that just shows you, how we look at it is, we're looking at assets that add value to the portfolio. To the extent they don't add value, we're very happy to continue to pay down debt and have more accretion to equity holders. But right now, when you look at the landscape of investable copper companies, the way I look at it is, okay, do I get comfort in the quality of assets? And do I see that management is incentivized to, have share price accretion? Clearly, I think it's important to look at where the comp is coming from for management, how many shares they own of it, how did they get their shares? And I think when you look at those kind of components, we screen incredibly well. And then the other key component is, if I'm right on the thesis of, good quality assets and copper prices go up in the long run, what is the value proposition? And this shows you, with that amount of torque that we have, as you increase your enterprise value, it accretes all to the equity holders. And so you get this, torque to your returns. And I think that is quite compelling. So, when I look at Horizon today, I look at it as a portfolio that is truly unique. It gets diversification that you wouldn't get from a junior copper company, which would be in one jurisdiction or one asset. With Horizon, you get multiple assets, multiple jurisdictions, multiple operators. You get that diversification. You get, significant torque to the copper price. And you can see our built-in growth that we have over the next many years, over the next decade, in portfolio that we have today. And we've got a great strategic partner that we can utilize to help us acquire assets. And so that's the Horizon story. It's a new name that's come up over the last couple of years. We're excited to add more assets to the portfolio and move our project forward, and continue to build. But if we do nothing over the next few years and we continue to use our cash to pay down our debt, we're very happy to do that as well. Now, I recognize there's a bunch of questions coming in, so I might pause there and head to some questions. And so I've got one question coming in saying, can you touch base more on your relationship that you have with your strategic partner? What is that? And so it's a great question. As I mentioned, one of, I think, the unique things in our story is our strategic partner. They're a precious metal royalty company. That precious metal royalty company just focused on, gold and silver. The nice thing about copper is it comes with precious metal byproduct. So as we acquire our assets, we've been able to finance our, acquisitions by selling a precious metal stream or royalty to that strategic partner. They have a right of first refusal. So, what that means is, if we decide to sell, the gold or silver that comes with that mine, if we choose to sell, we may choose to keep it, but if we choose to sell, they get the first opportunity to actually bid us on it. And if they've got the best price, they get to get it. If someone else comes with a better price, we have the option to go with them. But they're able to grow their business and grow their portfolio by getting streams and precious metal royalties on good quality assets. So they're able to grow their business. At the same time, we're able to grow ours. They own 34% of the company, and they own 100% of our debentures that I mentioned earlier. A lot of questions coming in. So the question coming in is, you have, 3 world-class assets in your portfolio. It's hard to find copper assets. how do you plan on acquiring assets that aren't as, slam dunk assets that aren't world class? So I think the question is getting at is in the investable space that you have, how do you add more assets to the portfolio? And so there's few things that we look at. One is obviously the quality of the asset. There's been a number of assets that we've looked at over the last, year or two that haven't met our threshold and criteria, where, the market may look at that asset and they go, this is a good asset. And our technical team goes in using Sandstorm and they do their due diligence and they realize, there's going to be some problems in the mine life in years 4 and 5 that the market might not see. So quality assets, so we stay away from those. So the quality asset is quite considerable. And I think when we started the company, it was just Hot Maden and Oyu Tolgoi in our portfolio. And the question kept coming up, how are you going to find great quality assets in the portfolio? And in an environment where copper is such high demand, we were able to demonstrate when we acquired that 1.66% interest in Antamina on, an asset that's world class, that we're able to transact. We're able to find where these assets are located. And there's this investable space where these minority positions or small positions aren't really sought after. The large copper companies or gold companies aren't looking to acquire, small minority positions in these copper assets. They're looking to acquire, operating positions, large, positions, and so they can actually own 100% of it. That's not our game plan. We're happy to acquire these small positions. So as we scour the planet looking for assets, our investable space is a lot larger than you'd find for a traditional copper space. So one of the questions is, can you talk more about your team and the board of directors? And so, great question. We have, I think a really solid world-class board of directors and management team. Myself, well, I don't want to toot my own horn, but, was named Canada's top 40 under 40, was named one of the top 3 CFOs in Canada by the Globe and Mail, was named one of the 50 best executives in business. And so, over the last decade and a half, have certainly a lot of experience in the mining space on what works and doesn't. Our CFO was a senior partner at PricewaterhouseCoopers here in Canada, ran some of the largest, files in that space, and really excited to have him as our CFO. Board of directors, includes, well-known entrepreneurs, legal community, a lawyer from the U.S. That's well known, and also economist that spent 30 plus years as senior economist at Scotiabank in the base metal space, and so we're excited to have her as well. And then our chairman is actually the CEO of the strategic partner, was named World Economic Forum Young Leader, also Canada 40 under 40. So very quality board and portfolio of knowledge and experience, and a strong technical advisors as part of that. So collectively have done multi-billion-dollar transactions over the career. So there's a lot of questions coming in, and so I'll try to answer one of these before we run out of time. But and how much cash do you have? What's your G&A burn? How are you going to raise equity? And so it's an excellent question. I think what's unique to our story is we're a company that has low G&A. Our G&A is $1.5 million US. My salary over the last 2 years has been $1 a year, so I'm not a significant cash drain on the company. I take my compensation predominantly in equity. We have over 10 million US cash in our balance sheet. Antamina is cash flowing today, and so that's going to our balance sheet and using that to pay down debt. We haven't taken on any debt outside from a strategic partner, and we've announced an undrawn 30 million US revolving facility plus 20 million US. Hot Maden, our third asset, the operator of that asset is looking to project financing at that asset level. And so we're excited for them to move forward on it. And as they move that asset forward, we'll continue to pay our incremental portion of the, the early works and construction costs. And so it's a great position to be in, not sitting at the barrel of a story that we need to go out and raise equity to move our portfolio today. So we're very excited for that. So I've unfortunately run out of time. There's a lot more questions coming in there, a lot of interest. Feel free to reach out, book a meeting, and happy to walk through the story. So everyone, thank you for taking the time and learning more about Horizon Copper.